From Bloomberg Quick Take, I'm Renita Young, and we're so sorry we had technical difficulties at around 10:30 Eastern when we usually go live, but you're in for a treat because today we're going to talk about this boom in retail investing and how you can find out how to pick the best stocks and maintain generational wealth. So I want to introduce you to Dr. Hans Boateng. He's known on social media as the Investing Tutor, and he has his best wisdom on how to do that. Dr. Hans, thank you so much for joining us.
Thank you so much for having me, Renita.
Absolutely. So I wanted to know a little bit about your background. That's usually where we start on your money story. And you and your parents immigrated here from Ghana when you were younger, and you learned what a lot of people call the immigrant experience and how immigrants relate to money, particularly in your family, of course. So tell me, how did you learn about money growing up?
Yeah, so I was born and raised in Ghana, West Africa. And, growing up, you're typically taught that the core to financial success is to get a degree, which enables you to get a high paying job. And once you get that high paying job, you work very hard, right? Essentially, that's the formula for success that most immigrant parents share with their kids. So then I had that in mind, so when I came to the US, we settled in Bronx, New York. And from what I was taught at childhood was the exact same kind of advice that other relatives here in the US kept telling me, Hans, focus on school, get that degree and work very hard, right? So then I just consistently followed that up until I ended up in college. I met a millionaire mentor at that time, and what he shared with me completely transformed my life.
It did. And in fact, he led you to a book that transformed a lot of people's lives, Rich Dad, Poor Dad, Robert Kiyosaki. Tell me about the contradictions you noticed when you read the book.
Yeah, so then there's this one line, the rich don't work for money, right? And that had me pause for a moment. I was like, what do you mean the rich don't work for money, right? Everyone works for money. You're paid X amount of dollars for the work that you do. So how is it that the rich don't work for money? And Renita, what I came to understand was that, the average person is trying to figure out, how do I optimize for a higher paying job? Meanwhile, the rich and wealthy are trying to optimize for, how do I work to acquire assets? That's the core difference, right? Trading hours for dollars or trading your hours for assets. And that's the core difference. If you pay attention, senior executives or, wealthy people, when they are going to negotiate, a new job or some kind of deal, they are always focused on equity, right? Ownership, so that it's not that they are earning once, right? If you are paid $50 per hour and you make that $50 for that hour, that's it. But when you are given equity, ownership, all of a sudden it's multi-generational. And once I understood that, just completely changed my life.
It sounds like you made the shift from a consumer to an owner, and it changed your life in the way that you started to build relationships as well. Because around that time, you decided that you wanted to help people understand, or you yourself wanted to understand personal finance better. Yeah.
Yes, absolutely. So I went on to read over 400 personal finance books, investment journals and articles, and I've read over 40,000 of these content, specifically, articles and research reports around personal finance and specifically investing. And for me, the reason was because, like I shared, with my story, as an immigrant, as a minority, we don't have this dialogue around the topic of money, right? So once I went on this journey and I understood it, the question was, what are you going to do about it? And for me, I wanted to share this newfound knowledge and information with my generation, specifically immigrants and minorities and underrepresented groups, which includes millennials and women.
All right. So to let you know what we've been talking about lately on Your Money Story, we've been having a conversation about financial independence or financial freedom versus financial wholeness. And so you talk about how financial freedom is not the same thing as debt freedom. Can you explain the difference?
Yeah, being financially free means that you have assets that fund your lifestyle, right? What that means is that you don't have to work for money. Being debt free just means that you have less expenses, right? If you have your debts paid off, sure, you have less bills to pay at the end of the month, but that does not translate into freedom. And the reason I say this is, let's assume a person reaches the goal of being completely debt free. Can you quit your job? And the obvious answer is no, you can't. That's the core difference between being financially free, which is true freedom, and being debt free, which is on the path. But then an understanding of this really emphasizes the point which I want most people to understand. On your journey to achieving debt freedom, do not ignore investing early to build financial freedom, because that, as I've shared, is true freedom.
Now, let's talk about that a little bit more, because investing influencers all over have been saying the traditional methods of gaining wealth, while they're still valuable, like don't get into too much debt, don't have too much high interest debt, contribute to your 401k, save. Investing influencers like yourself are saying that it's not going to cut anymore, and that stock market investing is the way. This is what you say. So tell us your case again of why stock market investing needs to be prioritized when you look at generational wealth.
It has to be prioritized because that is the only way, right, that the average individual is going to be able to build wealth, right? When it comes to wealth building, there are two core ways in being able to build wealth, assuming that you are not handed the wealth. And it's either via starting or owning a business or having some kind of investments, right? Because the ultimate goal is that you want to be able to grow your money, right? I tend to prefer stock market investing because it's the easiest type of investing. You don't have to do any work, right? You can compare it to real estate investing. You buy a property, you have to maintain the property, you have to find tenants, too much work. With stock investing, I pick and choose. Well, I can buy an index that captures the entire market, or I can invest in some of the best companies in the world: Amazon, Apple, Netflix, Google, Microsoft. And every single day that an Apple employee wakes up and goes to work, right, I am making money. Every single day that a colleague or a friend of mine is considering buying an iPhone, or every year or every other year that they upgrade their iPhone, right? As an Apple investor, I'm making money. And guess what? I didn't need to go look for that customer for Apple, but I benefit. So then individuals need to understand that they want to have their money in an asset that grows, because that truly is the way to be able to build generational wealth.
All right, fair enough. But how though? So a lot of people, what they really want to know, Dr. Hans, is how do they stock the best stocks before they skyrocket? So
Yes.
you have strategies that you give people in your generational wealth program and beyond. What are those very specific ways that people can spot the best stocks before they rise?
Yeah, this is a multi-million-dollar secret that I'm about to share with you all. And I'm doing this only on Renita's show. So take a pen, take a paper, be sure to note this down. First and foremost, I want you to look at how you spend your time and money. Within those activities are a lot of riches. So what do I mean? Most individuals don't realize that they interface or they interact with so many businesses on a day-to-day basis. So let's take time. How are you spending your time? So someone might have woken up this morning. The first thing that they did was to go check Instagram. Well, that is a potential investment opportunity. So Instagram is owned by Facebook. So you write down Facebook, right? So you woke up, perhaps on your ride to work, you were listening to Spotify. Okay, go ahead and write down Spotify. It's another company, right? You went into work and perhaps you are communicating with other colleagues or business partners, and you are communicating via Zoom. Well, go ahead and write down, Zoom. Maybe during lunch you stop by Chipotle to eat. Go ahead and write down Chipotle. So you can kind of get where I'm going with this. Pay attention to how you're spending your time. Within that, you will discover incredible companies. Now, let's switch to how you spend your money. There are over 100 million Amazon Prime subscriptions, right? Individuals are paying Amazon over $100 a year. If I were to ask, do those 100 million individuals own Amazon stock? The answer is a resounding no. Why is that? $1,000 just once invested in Amazon in 1997 would be worth almost $1.8 million today. That is generational wealth. So do not only be a consumer of these, different companies, begin to view them as investment opportunities. So pay attention to how you spend your time and money. One last secret I'll share with you is also focus on trends. In 2008, 2009, Renita, when 4G was rolling out, had I known that 4G technology would enable high definition video streaming, it would have been obvious that the main company that's dominating in this field is Netflix. Wow. I would have purchased a lot of Netflix shares, but I didn't pay attention to that trend. So I missed the boat. And guess what I missed? I missed a Netflix compounded growth of 50% for 10 years. To put that into context, investing $200 a month over that period of time would be worth close to $500,000 today.
Wow. It definitely, the numbers, when you put the numbers in, they put it into context. And I just want to review, you said that your best wisdom tips on how to spot stocks are pay attention to what you're spending your time on, how you're spending your time, how you're spending your money, and trends. Thanks for running us through that, because a lot of people don't know. But I got to throw you a curveball there, because when it comes to cryptocurrencies, nobody could have imagined that Dogecoin would get as much attention as it had. And at some point, Bitcoin was also not necessarily seen as a trend. So I'm curious to know what your thoughts are on investing in cryptocurrencies. Is there a specific strategy that people should use with cryptos?
Yeah, thank you for that question, because most financial experts will write off cryptocurrency or Bitcoin, right? And that is them failing to spot a trend. Now, Dogecoin. Let me share with you my thoughts about Doge. I've always said that, Doge was a joke, ignore it.
Yeah.
Renita, one thing that I failed to realize early enough was that Dogecoin was listed on Robinhood, right? That changes everything, because that gives anyone access to Dogecoin. So it doesn't matter that I feel Doge is a joke. If individuals have access to be able to purchase it, then you're getting demand for that coin. So when I found that out in March, had I known Doge was on Robinhood, I would have, gotten a small allocation to Doge. Money that I'm comfortable losing, right? For someone, it might be $500, for me, I would have allocated about $1,000 to that. And it's money that I understand that, hey, there's a possibility that I can lose that, but that's specifically for Doge.
Mm-hmm.
Now, the question we have to ask ourselves is, for a company that is like Robinhood, they are not going to list a coin if there isn't some form of value to that coin.
Okay.
So that's why I'm saying it changes everything and the dynamic. If someone had invested $1,000 into Doge at the beginning of January, they would have over $6,000 today.
Mm-hmm.
And I was like, wow, that is just eye-opening.
Amazing return there.
Yeah.
You know what I want to know from you? Let's say someone finds a Dogecoin or a Bitcoin or another stock that soars. How do you know when to sell it before it falls?
So I like to say, when it comes to selling, before you purchase an investment, make sure that you understand the investment, because the only time you want to sell is when your thesis around that investment changes. So, for example, let's say I'm purchasing Tesla because, and I own Tesla, by the way, because it's a phenomenal company. And I believe that they are the most vertically integrated company in the world. They own their manufacturing, they own their dealerships, they own the batteries that make the car, they own the machines that make the car, they own the chips that are in the car. I mean, I can go on and on and on. It is a phenomenal company. And I also know the attention to detail with regards to creating just impeccable and incredible cars. So all of a sudden, let's say I wake up one day and I feel like Tesla is doing a horrible job. They no longer care about customers, right? And the thesis around it changes, or maybe they don't really care that much about the environment. That is when I make a decision to sell. I never sell a stock because the market is on a downward trend or that the market is tanking. That is a mistake that often many people make. Before you buy a stock, have an idea of, why am I buying this investment? And once you know why you're buying this investment, ask yourself, do you love this company or do you love this technology? And I say technology because of crypto, right? So with stocks, do I love this company and do I understand it? That's when you invest. With cryptocurrency, do I love this technology and do I understand it? And if you'd give me a moment, I wanted to even dive into Bitcoin and what I love about their technology.
Please do, because a lot of people don't understand it, but they still invest in it. So let us know.
Yeah, I studied Bitcoin in 2017, and what I found was absolutely mind-blowing. So since humans created money, there's never been the best form of money up until Bitcoin. So what do I mean by this? Most currencies can be created out of thin air, right? I mean, during COVID, the US government printed 25% more of the dollars that's been in circulation, right? So all of the dollars that's been in circulation, 25% more was printed last year. What that does is it, reduces the value of money a bit and causes a little bit of inflation. Whereas you look at, a currency or an asset like Bitcoin, and there's a fact, which is, there are only going to be 21 million Bitcoins in existence. There's not going to be an additional one. So you ask yourself, okay, we're going to have 21 million Bitcoin. How many people are in this world? We have roughly about 7 billion people. If most individuals adopt this cryptocurrency, which, like I said, is the purest form of money, when you look at the different components that make up money, it needs to be divisible, it needs to be authentic, which means it needs to be recognizable, and most importantly, it needs to be scarce, right? If you have something that there's a lot of, it can't retain its value. So when you have 21 million Bitcoins that will ever be in circulation, ask yourself, if a billion people want it, or if 2 billion people want it, how much is it going to be worth? And all of a sudden, it's like, wow. There's this fact. They said that there are 49 million millionaires in this world. So 49 million millionaires. If each millionaire just wanted one Bitcoin, right, they can't have it because there's just not enough Bitcoins in circulation. So once you understand that, and you also understand the technology around Bitcoin, which prevents double spending, and you're able to track every single transaction that's happening at every given moment. You know, I don't want to dive too deep. It just makes it an incredible technology that has never been created before.
Okay. So I have to ask you about Dogecoin because, as you alluded to, a lot of people thought it was a joke. It kind of did start as a joke. But you know what I heard about currencies?
What?
I heard that what makes them currencies is that people believe in them. What do you think sparked this attention to Dogecoin?
Yeah, you know, I think that as for individuals in the personal finance space, a realization came to me about a few days ago. We take things a little bit too serious, right? And others don't. You know, people aren't just looking to be prim and proper all the time. Some people just want to have fun. And Doge is the gateway for them to be able to have a cryptocurrency which is anti-establishment, right? You know, Wall Street bankers are not looking to hold Dogecoin, but the average person is. Same with GameStop. And I think that phenomenon is going to continue to happen. And Wall Street should stop looking down at, you know, the little guy or gal thinking that they don't know what they are doing. You know, look, for as long as individuals are willing to buy Doge, the price will either maintain its value or continue to increase. The only thing that will decrease Doge's value is if people are unwilling to hold it. And there's a strong community around the Dogecoin. I currently do not own it because I just feel like two things. One, I wish I had known the Robinhood fact I shared with you in January. And two, it was rising too quickly. And I believe most of the people in the Doge community are looking for it to hit $1. And it was around 50 cents the last time I checked. I mean, I think now it's down to about 17 cents, which is a much better. If it went down to 10 cents, there is a likelihood I might get in because it's anti-establishment.
Yeah.
And we need to be a little bit more relaxed. I think in the finance community, we're too uptight. We need to, you know, have to understand that we can have, we can be a little bit laid back.
That's kind of what we like to talk about on Your Money Story. Of course, your own personal money story, but we like to bring it to people who may or may not ordinarily look to personal finance, but people who also want to be smarter in it. And so, like, it's interesting. You brought up Robinhood. I gotta ask you, what have your thoughts been on the gamification of it? Because it's almost as if many people say that apps have removed some of the mystery around investing for retail investors, but others say that it's been gamified. It's been treated and created as a game to investors, and many might have lost money out of it. What's been your thought on it? Has it helped or hurt? Apps like Robinhood and the others that retail investors use right now, have they helped or hurt retail investors?
They have absolutely resoundingly helped retail investors. Once again, you know, Wall Street, you know, they are looking at this and they are once again pointing fingers. Why? Because this is an app that came in to democratize finance. All of a sudden, the average person just with a smartphone can have access to the US stock market. And they don't even need to buy full shares, right? So Tesla is roughly around $700 a share. Guess what? I can buy $50 worth of a stock. Interestingly, when I started investing, I started with, you know, Netflix. And at that time, I believe it was $50 or so, right? So I could afford a share. right? But when you look at other stocks like Google, that's in the 1,000 per stock, the average person doesn't feel they can get exposure to it. Robinhood changed that, and they did it by allowing free trading. And I'm sure people kind of say, what about stock for order flow and all of that? Let's put that aside for now. Let's realize that Robinhood came in. They provided the ability for individuals to have fractional shares. They allowed the average person to have access to the stock market via a smartphone, right? And since launch, they've enabled retail investors build $40 billion in the stock market. And they've forced the Fidelities, the Charles Schwabs, the Vanguards, all to shift towards free trading. That is incredibly powerful. I do want them not to over gamify, investing, or push individuals towards more of like risky options trades, which can be a problem because short-term investing is not building generational wealth. It's long-term. Just like with everything in life, with education, with your career, with great relationships, it takes time. So individuals listening, please don't try and shortcut that process. It's the same with investing.
Okay. And so when people do get their returns that they're looking for, how do you suggest people proceed? Should they reinvest most of it back into the market or explain how you believe they should proceed?
So specifically for investing, if you've invested and your investments are growing over time, just leave it alone, let it grow, right? But with regards to individuals earning an income, the way that I like to look at it is when you earn money, right? A portion of it should go towards building you an emergency fund, which is savings. Another portion should go towards reducing your debt. And then the last portion should go towards building you wealth, which is investing. And if individuals, every dollar they earn, they are able to allocate it into these three buckets. At a certain point, your emergency fund is going to be fully funded, right? Whether it's 6 months or a year's worth of expenses. So you don't need to put any more money there anymore. You take that and then you divvy it up into investing and reducing debt. At a certain point in the future, all your debt will be paid off. And guess what? Now you roll all of that money into the investing bucket. And the person who started out allocating to these three buckets will be exponentially far ahead in building generational wealth than the person who was only focused on the debt bucket. And then 10, 15, 20 years, their debt is paid off and they're like, oh, I have more money to invest. Sure, you have more money, but what you don't have is time. And time is a non-renewable resource. I like to say I can make or earn money at any point in time, but I cannot get back time when it's been spent. So those three buckets is the formula for generational wealth.
All right. I think that's a brilliant place to leave it. Dr. Hans Boateng, the Investing Tutor, thank you so much for joining me. And everyone out there, if you want to learn more about the Investing Tutor, you can find him online and on all socials. I'm Renita Young, and this is Your Money Story from New York.